Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video we're going to be going over a position on New Zealand US dollar, why I've taken this position and what I'm expecting to happen next. So first of all, I'm just going to start off with the weekly time frame. I'm just going to zoom in a little bit, and what we saw from New Zealand US dollar last week was a nice little change in the weekly candlestick bias. So what I mean by that is we've been bullish for the past sort of 4 weeks, and last week we had a reversal to that. What I've now seen is that price has broken through that weekly low. Now that usually means that price is going to follow that sort of direction to the downside. You can see here we break the weekly high, price moves to the upside, we break the weekly high, price moves to the upside, break the weekly high. The only exception is when we come to those key support and resistance levels like this one here, where price has found resistance at this sort of 7230, 7240 area, which is the potential area where there is a kind of left shoulder in the market, or the neckline of the sort of head and shoulders pattern is a bit of a sort of slanted neckline here, but this could be rejecting that sort of head and shoulders pattern that has been forming on this weekly time frame. So what I looked at then was the sort of daily candlesticks, and what I like to look for are the sort of bearish candlesticks. The reason why I like to look at bearish candlesticks is because usually that means that the 4-hour time frame is in a little bit of trend, and we can see on this 4-hour time frame that price is starting to make lower lows and lower highs. So after hitting that resistance level, this is what we've got: nice lower lows and lower highs. Now within this area just through here, I'll redraw all that in a second, but within this area here, the most traded level is this 71.68. okay, so that means that in this sort of pullback area, the most traded area of that is this level, which could act as a resistance level going forward. So I looked for a sell order in and around here, expecting the market to continue its trend to the downside. Okay, now it could pop up a little bit higher. We do have a bit of obviously a supply zone just a little bit higher as well, where the sellers kind of entered on this point, so it could pop a little bit higher up towards 71.94 or 72, a nice a whole round number there, but alternatively this is a great level to be sort of selling from, so that's why I've looked for the sell position in here. Now my targets are actually all the way down here within this consolidation zone, because within this consolidation zone the level hasn't been tested, or the high volume level has not been tested through that area. So if I actually just put a line on here just to show you what that level is, it is 7032, and that is the level that I'm going to be targeting on this trade. Now just because I'm targeting that level doesn't mean that I'm going to hold the trade all the way to that point. What I'll be doing as price moves down, or if it does move down, obviously we don't know what's going to happen, and we get a nice potential trend, it doesn't always play out like that, but what I'll be doing is I'll be managing my stop losses as price makes lower lows. If we do start making clear lower lows, I'll be moving my stop loss following along with that, and then I'll be taking positions on the way down. Okay, so keep an eye on Kiwi US dollar. This is the opportunity that I saw, so I'm looking for a short potential on New Zealand US dollar down into 7032. Thanks for watching guys, and I'll speak to you soon.